Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 24th of January. All right, finally, the markets are taking shape, right? Fed sentiment around the interest rate cuts was initially at the start of January, around March. It's been pushed back to like May, right? So what we're seeing is a bit of a strong dollar sentiment across the board. BOJ on hold, but the dollar pairs are running hot, and we're starting to see euro finally starting to drift lower. Sterling's hanging in there, but it's set for a breakdown. And then you've got weakness in the Aussie and Kiwi data. So they're already moving lower. And then you've got the Fed outlook on top of that. Now, looking at today's opportunities, right, and just coming straight back to the calendar, I want to make these insights as quick and short as I can. Now, the key focus, right, manufacturing numbers are key for all economies. So you've got the German numbers, which I'd say would be the more important than the Eurozone. But keep an eye on that. That brings euro into play. And we've got a good technical setup there on euro against the dollar. And then also you've got the UK PMI numbers. Once again, I think the manufacturing PMI, the standout, right? So that brings sterling into play. And then last but not least, we've got the Bank of Canada interest rate decision, right? So there's three major parts here. To me, it's euro, sterling, and CAD, which are the key ones that we need to be focusing on. Now, so let me just come back to the charts just to give you a sort of a bit of a, feel for what I'm thinking here, right? So we've got work with the trend, right? So the trend here, short-term trend is down. It broke down through this technical level. You can see how well the trend lines are behaving, and euro is sitting here at 108.60. Now, the Fed sentiment, right? Because they've pushed back the expectations for rate cuts to like a few months down the track, gives the dollar like a strong hold or a foothold. All we need is weak European numbers, and we've got a nice, easy trade to the downside. That's as simple as it can get, right? Trade with the trend, look for weak numbers, and then get into the trade to the downside. That's where I'm thinking, like just keeping it super clean and simple. You don't have to sort of go looking for advanced strategies here. Same with sterling, right? We've got, those sterling retail sales figures last week were terrible. If we get the manufacturing PMI numbers and the services PMI numbers as well, much weaker, well, sterling is going to start cruising to the downside as well, especially if the earlier European numbers are weak, right? Because euro and sterling generally correlate like 90 to 95% of the time. We get weak UK numbers on top of that. We get a nice, easy trade to the downside in sterling. Once again, looking for the overall trend. Then you come into dollar CAD, right? And the dollar CAD has just been moving topside with the stronger dollar, drifting sideways through January. But now we've got a nice sort of trend line here in the downside. What do we need to get this triggered, or even the top side for that matter, I should say? Well, it comes back down to, don't forget, we had really weak Canadian numbers, okay? And if I just, actually, instead of changing screens, let me just drag this across. We've got the Bank of Canada interest rate decision, so we'll hear from them. Now, no change of rates expected, right? So don't think you're going to get a rate cut or a rate hike, but I think they've done their job, because what we are seeing is weaker CAD numbers. So when you look at the total CPI inflation coming out in December, 3.4%. We've had really weak retail sales figures. To me, inflation is falling off. This is not too dissimilar to the Antipodeans, Aussie and Kiwi, where the economies have shut down since the Black Friday sales in November, and nothing's happening. So if that's the case, and we get a really, and the Bank of Canada would have a bit of extra data, we may get some sort of inklings of when they may potentially cut. They'll definitely be saying they've finished hiking. It's about their sentiment going forward. If we get weak sentiment here, dollar CAD would go up. Okay, if we look at dollar CAD, well, it's sitting mid-range. Now, if the Bank of Canada is like hawkish and remain on that aggressive, we're not cutting tone, but then we may see dollar CAD move to the top side. If they come out and say that they, they can see the pain in the market, inflation's falling, we're almost at our target, well, you're going to see dollar CAD move to the top side, and that sort of goes with the strong dollar sentiment, and you've got the weak tone there from the central bank. So really, top side dollar CAD is where I think the money is. All right. So that's where we are, guys. You don't have to complicate things with your trading. Just look for, where things are lined up. right? If I can just get off that pen, right? We're looking to go with the trend on a number of different instruments. We've got data coming out, which, you know what, for all chances could be weak. Sterling's got a nice trend line. Euro's already drifting lower, so it's got easy momentum to the downside. And dollar CAD, I think the Bank of Canada will have maybe a dovish sort of sentiment. We've got a strong dollar, and we might see dollar CAD move topside. They're my three picks. Good luck, guys. Cheerio.